Hi traders, you see it is after hours on Tuesday the 7th of April. Just doing a quick update. Again, we try to give out information to help newer traders. Also helps ourselves refine our own game by helping other people. We don't do this with a sense of trying to just promote our own business and be rah-rah, and we're pretty humble here at E-mini Wizard and Market Wizards, and really it's not about us as much as it is about becoming better traders and helping others to do the same thing. The key highlight today was that we thought it was morning after trend day. We thought that you could buy a pullback, and we did think that it would be a stolen range, that we would not have as much travel range upside because of the egregious nature of yesterday's range trade. The breakout trade and then the subsequent rally, 42 points. That's a big day. That doesn't come along that often. So we thought that we'd stolen a lot of today's range, perhaps anywhere from 2 to 5 points of today's trading remaining. And that's why the 82 to 85 we thought became resistance. So our assumption was we could certainly test the high and test last week's high, but beyond that we wanted to be very conservative. We also thought that 68.75 was the aggressive support. And this, you see, we posted very early. That was our belief yesterday when we left off. If we can find one good trade a day, we're golden. We don't need 10. We don't need to be in the market all day long. Find 1 or 2 good trades and try to carve something out of every day. The psychology part, we really started to understand. Can't even get to T1. Yesterday we had no problem with that. So we understood already very early on that it was not the same kind of day as yesterday, and range trading was the order of the day. And if, in fact, we had any luck whatsoever, we could come back and do a retracement. And for us, we thought 80 was the key because that was the yesterday's high, and we felt once we were unable to sustain trade above that, then we could come back and do some retracement. And our agreed upon target that we wanted to get to for sure was 74 to 72, and then below that we thought anything could happen, including testing that 68 that Zeke and I believe would be a key player. Later in the day, as the market starts to move that way, and 80 had become pivotal, depending on whether you had trailers or not, you're able to come into that 68 target. 65 was our deeper support. It was a basically measured move at 40 back into the 65s, and we felt that that would be our first key support test before the 62s. So that's a wrap of what today's trading was all about and what we thought was important and put out there. And on the charts, we wanted to see this umbrella trade unfold and come back and test the rain line. That was our biggie right here in the afternoon. Get to the 71, 72s, and then the overflow down here would be the gravy part. And our charts for the levels, we needed to undo this red line first to get down in and tackle this 65, 66 zone. A little bit lower over on this chart. Everyone is different. This one helps us to see when we have made a violation and then come back in for retracements. And theoretically, these are areas of potential support that need to be undone to come backwards. 15-minute chart of beauty, that was our potential target zone. You can see the error that we had over here. We noticed this. We thought this was overdone and needed to come back in towards the blue line on this 120 chart. Obviously the 90s, same in the 60s and the 30s. And these are, it's an art form to use this, but it gives us a broad idea of what chart is in play, and you can certainly tell the difference in a chart like a 120 versus, say, a 30-minute chart or even a 15. So the deeper charts, we want to know what they're doing because we believe bigger players are watching those as well, not just a 2-minute chart. perfect example of angels and demons, where we had that 80, where we had a resistance late day, got above it a few times, could not sustain it, and then had a nice drive. This is probably the best short in the last couple of days, coming back in to test. First of all, obviously 70 was the IB high from yesterday, but primarily that 68.75 low right in here. We wanted to undermine those traders, which we felt were the weak hands that bought after the IB yesterday. This was the extended range above probably 72 to 75. We just felt this was the egregious part, and that was some of today's trade that we felt was just overdone. So the afternoon trade, once we broke down this 75, 74, then it was lights out, coming in and completing what I felt was a great trade for anybody that was patient. Early morning magnet was 71, and we felt that anybody playing for the gap should take profits. Don't plan on a plunge. It takes time to rotate, and we felt that we had a couple of shots to try to get to that 81, 82, and don't overstay it. And then the afternoon sell, you can see it. Fibonacci charts show the retracement levels. I like to show our traders this idea of obviously crossing a center line, but more importantly, just a feeling that there are certain Fibonacci ideas that will continually come into play. And a lot of times you have to play contra. If you get a good sharp move, you have to expect the 456, which will occur over and over and over. So that's part of our style of trading too, is looking for contras. Today was that type of a day, looking for a contra to yesterday's move. All right, this is E signing off for Market Wizards and E-mini Wizard. I hope that you had a great day, and we'll catch you on the next one.